Most traders waste 30 minutes every single day flipping through charts, having no real direction. I build my bias in under 5 minutes, and today I'm going to show you exactly how. Now, what I like to do is always start down on the 30-minute time frame. I'm looking for real structure. Higher highs, higher lows for bullish, lower highs, lower lows for bearish. So when we look at NQ here, for example, I can take my little square tool. I can see that we are progressively creating these lower highs, lower lows, and starting to shape us into more bearish structure. So right now, when I'm looking at price action, I'm looking at when can I take a setup for the downside. So the next point of attack that I'm going to do is go down to the 15-minute time frame here, give price action a little bit clearer of a view for me so I can see just what's been happening in the last day or two. Now when I do that, I can start to see some more clear areas where price action is obviously bouncing off of, multiple times and then rejecting. We can see here, not long ago, we had a bounce off this 23,054 area on August 1st. So this happened at about 6:45, 7 a.m. Eastern Standard. Price action bounced up, rallied a little bit, and then progressively started to drop. But before it dropped, one of the areas that did end up bouncing a little bit is that exact same kind of 23,050 area. Now, when it came back up and it retested, that showed us that once the breakdown happened, we could potentially retest that area again as a potential resistance. Now, these are things that I like to look for. I like to see those reactionary areas to let me know where I should be looking to potentially take trades. Or I can also use those as my stop loss areas or my take profits, depending on where an entry might present itself, if I'm earlier in it or a little bit later in the move. So once we've kind of figured out that resistance point now at this point, we can start to look at where is our potential support zone. Again, using a line or a rectangle tool, you can kind of see over across where price action tends to bounce from or has shown signs of bouncing before. Now it's up to you, whichever one you want to use here, zones or lines. I just find that I like to read price action as it enters into a cushion or a zone of price action rather than trying to be too specific. Being too specific can definitely lead you to taking trades either prematurely because it hits your level and you think that's the exact spot, or entering into a trade that is actually not showing you signs of what you thought, but you enter because it hit a single line. Always wait in these zones for price action to actually show you. That is key. So now that we have these zones drawn out, we can kind of see where price action tends to react and go towards at the moment. We can use these as overall profit targets and or stop losses, depending on how price action shows itself on this next one. This is where these 20 EMAs, 9 EMAs, 60 EMAs, 200 EMAs can really come in handy because we have the structure showing us that is going to the downside, right? We know price action seems like it's leaning towards that direction. Now we have a zone down here where we can look for price action to potentially break underneath and start to look for a position. Now, if you want to be a little ahead of the game, give yourself maybe an earlier entry and then kind of analyze as it approaches the zone, how does price action react? That way you know if it wants to bounce down in here and start pulling back up, you can still take off profit with an entry towards these EMAs. You are buying or selling at a better price overall if you're entering more on or towards these EMAs. Now, it's important not to throw on tons of EMAs and make your charts completely messy. What I would suggest is put one or two of them on, maybe the 20 EMA and the 200 EMA, so you have a nice broader scale and you can allow price action to really show you the direction and just use these EMAs for simply guideline. So if price action comes back and retests that 20 EMA up here and I see signals for short side, I can go ahead and place a nice short side setup aiming for this low. And like I said, if it does bounce, we still are able to get out a decent price. So once we have that daily bias down, we can start to have a sense of direction every single day. If you do this every day at either the Asia session or New York session, you will be golden and you'll have a better understanding of where price might want to. Don't make it too complicated. Trading is much easier if you don't make it complicated. Trust me. The more you complicate, the more you add things to your system, the more it's going to confuse yourself. If you waste time bouncing between time frames and second guessing yourself, try this out, see how it helps. I can almost guarantee you this will give you much better clarity. But that's going to be it for today's video, guys. Hopefully this helps you find your daily bias day in and day out. Leave a like if you enjoyed the video. Comment down below, let me know if you put this into effect and how it helps you. And of course, if you are new to the channel, please subscribe down below. Hit that button and watch out for more educational content on trading coming very, very soon. Peace.